I know you guys ain't trying to buy a house right now, because if you do, it might be the dumbest thing that you can do. And I'm going to tell you guys why. Before we get started, as always though, like, subscribe, share our channel as we continue to grow. In real life, I'm a certified financial planner. I managed over $250 million in assets. But on these YouTube streets, I'm just giving information. But I know today, y'all looking at the housing market, might be a good time to buy. No, it would be the dumbest, and I would say dumbest time to buy. Unless it's a steal of a deal, we're going to go over why and why what stock out there can be the catalyst of some growth when it comes to you getting into the housing market. Lego.
Because of the drop in yields, mortgage rates are at almost a 2-year low now.
Yes, mortgage rates are almost at a 2-year low, meaning if we want to buy something, right, it is the best time to buy since 2022, but still might not be the best time, my profiteers.
Diana Olick with those details. Diana?
Diana, look, she on her phone checking her notes. Uh-oh, you got me.
Yeah, that's right, Kelly. Mortgage rates dropped 11 basis points after the CPI report this morning. The average rate on the 30-year fixed is down to 6.11%, and that's according to Mortgage News Daily. The rate has been falling for 6 straight weeks, but mortgage demand seems to be waiting to come out of the gate. Refinance applications only increased 1% week to week. They were 100% higher than a year ago, and while that...
What does that mean? First off, 6% mortgage still feels so high compared to where they were a few years ago, right? Like literally refinance standpoint, we refinanced my crib, had to. We went from 4.2% to 1.2%, my profiteers. And my office, because I own my office, right? Same thing. That was like at 5.2. It was a business, but that went down from 5.2 to 1.9. So crazy a few years ago from refinancing standpoint. So 6% is still high, but compared to what it was last year at 7%, that's why literally 100% growth. That means this time last year, 5 people a day refinanced the homes. Now 10 people a day. But it only gets better, my profiteers. It only gets better.
May sound like a huge increase. The numbers were so low last year that even with the large gain, refinancing is still really historically low. Most borrowers have rates well below 5%, and anyone refinancing today likely bought their home in the last 2 years when rates had moved significantly higher off of record lows. Now, applications for a mortgage to buy a home rose just 2% for the week, still 3% lower than the same week 1 year ago, given sky-high home prices and low supply. A lot of potential buyers are waiting for the expectation that rates would move much lower. And actually, the CEO of luxury home builder Toll Brothers said on CNBC this morning that he does expect rates to come down into the 5% range. That was Doug Yearley. And
Yeah. So going from 7 last year to 6 to 5, that is a large drop. Very large drop. What that means is got 100 grand. Now we're not paying 5,000. Well, now we're not paying 7,000 eventually, we're paying 5,000. Over a 10-year time period, that is $20,000. Over 30 years, Jiminy, that's $60,000 with compounding interest along the way. Man, you can buy another house if you save from 7 to 5%. What if it goes to 4%, my profiteers?
he said when that happens, you should, quote, look out because the market should take off. Kelly?
Wow, I would say wouldn't that be nice? But if that pushes prices up further, and how much difference in the margin does it make 6.25 versus 5.8?
Well, it makes a lot. Every time you do a refinance, they look for 75 basis points. They say that's worth it. But if you're buying a home, depending on the price of the home,
75 basis points, right? So that means something was at 5%, now it's at 4.25%. That's that sweet spot. Doesn't seem like that much, but again, over 30 years, that is a lot of cachet that stays in your pocket.
it can not only make it more affordable for some buyers, but it also makes them qualify for the mortgage. Because remember, mortgage lending is very tight right now. And a lot of folks think they can afford it. They want to put that money down, but they don't qualify for that loan at that rate. When the rate starts to come down, more buyers qualify for the loan. And of course, more can afford.
If more people are buying, then this one company we believe is going to profit the most out of all the mortgage companies. And what company that is? Well, my profiteers, that company is Rocket Mortgage. Now, for disclosure standpoint, again, we use this to refinance one of our properties. So we like them. We like them. They did us good, right? We did go to under 2% from a financing standpoint. So great. Lock that in, player. Lock that in, which we did, of course. But as you guys can see from the chart, right? Came out in 2020. Now we know the owner of Rocket Mortgage is Dan Gilbert, the owner of the Cleveland Cavaliers, right? What he's doing with downtown Detroit is crazy. They call it Gilbertville. Like, they made so much changes. The prices from a home value standpoint in some parts of Detroit, not all. Some parts of Detroit has grown dramatically, and Detroit's way different because of the investment that he put in. But as we can see, right, it shot all the way up to $38 a share, and my profiteers, that was as high, right? March 21, and look at that, went all the way down by 84%. Good Google and Moogle at 84% drop. That is crazy, and that happened literally in a year and a half. So didn't look too good when it was at $6 a share, did they? Not at all. But what has happened since then, my profiteers? Slowly but surely, they are going up. And they are the #1 provider of mortgages in the country, right? Up by 215%. So if you bought this at the bottom in September 2022, now who really would have done that, right? Of course, revisionist history with the stock market all the time. But if we bought it back, and today, even though it went down a little bit from $21 a share to now 18, that's a 218% gain. My profiteers, triple our money, right? 100,000 would have went to 400,000. Woo! And who says no to that? But it's not too late. Now, yes, short term, we are above our Bollinger Bands. From an educational standpoint, Bollinger Bands, right, is kind of where like the top is, right? So don't want to buy here. Don't want to buy here at the top because we're at the tippy top, right? We want to buy here. Now, I don't know if it's going to get back to $11 a share. So that might not happen. But going back to the mean, right, because it's usually around this mean, at least buy here. So we probably don't want to get into is at $16, which is, yes, I mean, that is going to be a almost 20% decline. Will it go down by 20%? We don't know. But, I mean, it was at 21 and now it's at 18. So that is a almost 20% decline right there. But I say that to say, I think, especially as mortgage rates continue to go down, people are going to refinance and buy new houses. And since Rocket is the #1 player in the market when it comes to refinances and new homes, there are going to have more origination fees, more people use them. That means they're going to make more money. And when they make more money, what happens to their stock? It's going to go up. And I believe that inflation is going to continue to go down. I believe mortgage rates will actually touch not even 4%, but actually to 3%, because we were so slow to basically lower rates. We have to continue to lower rates over the next year and a half to make sure we don't fall into a recession. And we know the Fed does not want to do that, especially if Vice President Harris gets elected, because she is trying to do one thing and one thing only, get reelected. And if it's a recession on her watch, it's not going to happen. When it comes to President Trump, former President Trump, if he wins, we already know he's slashing. He already said he's going to try to lower rates as much as possible. So we know rates are going to be lowered. Now, it might not be tomorrow, but I definitely think come 2025, 2026, definitely 2027, mortgage rates will probably be close to 3%. Now, can we wait 3 years to buy a house to get something at 3%? I don't know about that. But buying a house today, my profiteers, would be the dumbest thing, unless it's a steal of a deal. The dumbest thing we can do, we definitely want to wait and hold off. But a smart thing to do, I would say, is to buy Rocket Mortgage to get back to where it was, right? 100% return. Bought it at the bottom, would have been up by 200%, but you never could time the bottom. But I know one thing. If it does take them, let's say 3 years, right? 2027 for rates to get back to low 4s, even high 3, like 3.8, 3.9%, and they're rocking and rolling like they were 4 years ago, are you mad that your money doubled? Think about that. That's 30% a year. The stock market averages 10%. You do 3 times the stock market in 3 years. Diversification wise, don't put all money in this stock, of course. Don't do it. Do not do it. Risk tolerance, my friends. However, this is a company I believe, because of what it showed in the past, when people are rocking and rolling, getting mortgages, doing refis, they're the leader. And with technology, of course, they made things a lot easier. They have an AI base that allows you to kind of put all your information in and you know what you're going to get. So you don't have to talk to a person. So from an automation and expense standpoint, that's going to help them grow as well. So I believe Rocket is going to make the bag once interest rates continue to go down. And as we can see over the past year, as interest rates went down from 7 to almost 5%, they've tripled. Well, my profiteers, that is information about good old Rocket, Rocket Mortgage, Rocket Money, and all the other companies inside Rocket. Dan Gilbert, even though he did not like LeBron until LeBron came back. Story for another day though, right? He made a calculated decision and that went wrong. But this decision, when he created Rocket Mortgage, has went right. Now the stock went down, of course, but like I said, I think it's going to double in the next 3 years, which gives you a nice bag. Anyway, so comment below. You guys think inflation is going to go back up? You think it's going away? Also, is Rocket Mortgage and Rocket Companies a good investment, or has it reached its peak? I know one thing, love is love. Let's make some painful profits together, y'all. Peace.
Making the money mistakes, make a payment on your bills and you still late, yeah. Painful profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes, make a payment on your bills and you still late, Painful profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you know, and it could be different, you know.